Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You are watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty had closed at record highs on Friday after the exit polls, and now with the assembly poll results even bettering what was projected in the exit polls, with the BJP winning in 3 out of the 4 states, will the Nifty continue its record run? And if yes, then should you invest more aggressively in the stock markets? We will tell you all of it, but first up, the top headlines we're tracking for you this hour. Indian markets will rejoice with a gap up. The unexpected and stunning electoral sweep of the BJP in Chhattisgarh, Madhya Pradesh and Rajasthan. Equity strategists now hope the march towards winning the national elections becomes easy for the BJP. Investors should now bet strongly on the long side by putting in additional money into diversified equity funds to ride the incoming rally. Government PSUs in the metals, railways, defense and banking space will enjoy fresh life, experts say. Very good morning to all our viewers and good morning to you, Shail, as well. Well, after surpassing the previous record highs on the first day of the December series and continuation of the bullish sentiments for 5 weeks now, where do you see the Nifty headed now? The benchmark Nifty had hit an all-time high of 20,292 in the previous session.
Good morning, Sakshi, and a very, very warm welcome to thousands of viewers who are joining us on this wonderful telecast on a bright, sunny, clean morning in Delhi. Sakshi, today I will not talk about levels. I think this is the second time in my career in 27 years that an opportunity has come up which defies the normal expectations that you might have to define the size or the value of this opportunity. Let me just please allow me this flexibility. Today I will not talk about any where the Nifty will go, what will happen, but I must take this opportunity to make our viewers understand that a structural construct of the Indian market has improved for the better. As you rightly pointed out, we are in the middle of a fantastic rally. There are records high everywhere. But will this market go substantially higher from these levels? Yes, of course. Now, what has happened? The tone, tenor, texture of Indian markets has changed rapidly after BJP's electoral sweep that you've seen yesterday. So, you've heard everything. Heartland politics, Hindi belt, all that is fine. I am just saying that the market is now very clear. It treated yesterday's victory of the BJP as a semi-final, and from 6 months from now, it has just understood that life will be a lot more easier when you look at the result of national elections in 2024. Now, what will happen? Of course, the markets will open with a gap up. 200-250 points on the Nifty is a given. What will happen after that? The Nifty will stabilize and after 5-7 minutes of trade move in a sideways band. We have seen that happening from 26th of October, that all gains that have come on gap ups, and this rally is going to get strengthened further. Now what you have to do, Please try and understand, the less you trade in this market, the more money you will make. This is a market which is buy and hold, and there are many reasons that are coming together. Foreigners who have been net sellers over the last 5-7 months will now read this result in a manner that the BJP will come back with a resounding victory, perhaps with a higher majority in 2024, and will now start buying. That means a fresh set of money is going to come in at 20,250 levels, and that will push the Nifty higher. What else has happened? The theoretical concept of the India alliance has now received a body blow. At the same time, you are seeing a dip in the US 10-year yield, now at 4.2%. It is the lowest since September 6th. The winning margin of the BJP in states where it is getting re-elected is better than the existing performance. Look at what has happened in Madhya Pradesh. 64 seats of the Congress, 165 of the BJP. It is 2.57x. Sakshi, nobody is looking at the numbers like we do. So the BJP is 2.6x times bigger in Madhya Pradesh, where it was fighting an incumbency. So look at how the electorate has rewarded BJP's policies, and look at how the Congress has lost ground in Chhattisgarh and Rajasthan. Even in Rajasthan, the BJP is 1.7x Congress. In Chhattisgarh, it is 1.6x Congress. So you have to see these positives in a very different light. This is not a market left any longer where you trade it intraday. Possibly you will make a bigger loss. But if you buy and hold, if you buy every dip from now on, and of course the markets will correct, they will give you an opportunity to re-enter. But please rechange and refocus. The structural construct of the Indian equity markets have undergone a dramatic change for the positive, and the Congress has been smashed to smithereens. We will try and get you a bite where Prime Minister Modi, while he was addressing the party at the BJP headquarters in Delhi, said, "Ab karo tayyari hat-trick ki." Something to this effect. I will try and get that bite sourced, and that is, Sakshi, what we are looking at. A bigger, more resounding mandate for the BJP in 2024, and between now, which is the 4th of December, and when results are about to come in the month of May, mid-May, you will see a fantastic rally. The first 1,000 points will be fairly quicker on the Nifty, and then you'll see the budget coming in, there'll be events. Of course, you'll get a dip, but that dip has to be purchased, that dip has to be bought, and it has to be bought by using your time deposits into good quality stocks, good quality fundamental equity funds, maybe a flexi cap fund, maybe an equity diversified fund, and that's the way forward, Sakshi. The tone, tenor, texture of Indian markets has changed rapidly after this BJP's electoral sweep. This is a new market that has opened today with a gap up. ये एक नई तेजी के आगाज है, Sakshi. I'm so sorry I'm repeating myself, but I have to convey the importance of this electoral sweep in terms of how the markets will now perceive it immediately and in the medium to long term. We are in the mother of all bull markets, Sakshi.
Wonderfully said, and a lot of phrases that should go down and get imprinted on the minds of investors who have been very jittery as far as the market valuations were concerned. Perhaps this is just the beginning of another bull run, like you pointed out. And perhaps the approach towards markets has to be forget intraday, forget the puts, and orientation towards markets should be long-term wealth creation. And that is what we are looking at. On Friday, we also saw the NSE join the BSE list of companies to cross that $4 trillion mark as well. So we are headed onwards and upwards. What about the Nifty Bank? That added 1,400 points over the last 6 sessions. It's now within touching distance of, again, that 45,000 mark. The week gone by turned out to be the best week for the index in the last 5 months as well. So the banking and the financial, the biggest, heaviest weighted index will now also take charge?
Well, Sakshi, in my enthusiasm about writing the commentary for the broader market, I actually negated both the Nifty and the Bank Nifty. I have not come up with levels because I'm so happy. But like I said, we are moving up, and the Bank Nifty has been an underperformer, and I'd like to put in two more words here. See, it's the blue chips that will lead this rally, Sakshi, and the reasons are enough. Nifty has just appreciated 11% in the year to date so far, and we'll show you a lot of comparative charts that we've made up, and Nifty has actually underperformed. You see, 11% is what the mid cap Nifty rose in the month of November, right? एक महीने में और so the Nifty will play catch up. We'll try to show you a comparative chart of the Nifty with other global indices, the Dow, the Nasdaq, the S&P 500, and you'll see that while we are rejoicing a record high, but the year-to-date performance of the Nifty is nothing much to speak about. So the rally will first come into the Nifty and therefore into banking stocks. And lo and behold, where do foreign institutional buyers put in money? They put in money in frontline counters. So the best strategy, Sakshi, for this is to buy a simple equity diversified fund that is mostly composed of stocks that make up the Nifty, and that is the one that will rally the fastest and the highest in the most immediate term. You should also get into the flexi cap fund, but the understanding is this: it is the rally that will be led by the Nifty, and that rally is going to be led by the Nifty for two reasons. It is a relative underperformer in the markets compared with the mid cap Nifty, the small cap Nifty, the auto index, the FMCG index. All of them have outperformed the Nifty by a wide margin. So it will be a catch-up rally, and this catch-up rally will be fueled by foreign institutional investors who have so far not joined this party. Sakshi, I repeat myself, you are seeing Diwali, Christmas, Holi, Janmashtami, Vijayadashmi all coming together, and it will start together. It will start today. So there is no point chasing the gap up. Let's just sit and understand the structural construct that the market has undergone in terms of change, and this change is for the better. Buy every dip and use a monthly SIP or even a fortnightly SIP to get very quickly into the rally. If you haven't started on Friday, today is the day to start. Sakshi.
Absolutely. What about the FNOQs? Any particular stocks that are on your watch list, or are we just going to see and cheer the Nifty clock in even higher highs?
So Sakshi, I think we are going to stop working at 9:15:01. The Nifty will open gap up and then it will turn sideways. Right? That has happened in every gap up. Please write it down in a notebook somewhere, that when a market goes gap up and it's a structural trend, then it turns sideways. Maybe it will go higher, but if you really push me, I would look at all PSU stocks, Sakshi. And one more thing, the next wealth creators in the market are most likely to be PSU stocks. Remember, Prime Minister Narendra Modi on the floor of the parliament said, PSUs ko dekhiye. We'll try and get both those bites sorted out for you, and in the 2:30 p.m. show we'll have them for your perusal. But Sakshi, I think auto stocks, Hero Motors reported a 25% rise in monthly volume sales, and that is something that we need to look at. Sakshi.
Absolutely. Let's also look at what the global markets have been indicating and any kind of cues. Although we don't need their support today, it's all domestic cues that will help the Nifty go higher. But still, let's look at them. On Friday, the Dow and the S&P 500 made new highs for 2023, ending 0.6 and 0.8% higher respectively. And this despite that the Fed chair, Jerome Powell, saying that it is premature to conclude with confidence that the monetary policy is sufficiently restrictive. Now, markets in the Asia Pacific, you did see all of them, Dow, Nasdaq, S&P 500 upwards of 0.5 to 0.8% as well. Asia Pacific opened mixed at the start of the week, with investors awaiting a slew of economic data and inflation readings as well. So you have the Nikkei slightly down about 0.8% or so, and you can actually see the Kospi up in trade about 0.6. So it's a mixed opening that you can see in the early market action, but the benchmark Nifty and the Sensex are likely to open on a strong note, as the trends on the GIFT Nifty indicate a positive start for the broader index, with about a 280 point of a surge on that front. Another factor supporting the market sentiments could be the return of the institutional flows. Foreign investors, buyers for most of the last week, had another strong number on Friday, even higher than the domestic institutional investors. They bought shares worth 1589 odd crore rupees, whereas the domestic institutional investors purchased about 1448 crore rupees worth of stocks in December, on December 1st as well. Let's now welcome our guest on the show to discuss more about what should you be doing in case we do see this gap up. Devin Choksi now joins in, MD, DR Choksi Finser. Very good morning to you, Mr. Choksi. It's an absolute pleasure to have you with us on a day that follows a remarkable victory for BJP in 3 of the 4 states yesterday. The gift Nifty indications are a 3-point gap up. Big question is, how should one be really approaching this market sentiment, and what the victory of the BJP in 3 out of the 4 assembly state polls really means for the stock markets at large?
Good morning, Sakshi, and good morning, Shail. Well, I think the important part is that on one side we have got significant amount of emotions, significant amount of expectations now. On the other side, the real economy and the market. The real economy, the good news is the real economy is doing extremely well. If you go to the Bharat per se and visit different pockets, you realize that I think the country is progressing on every front because of the superlative spending on the infrastructure that we are witnessing. On the other side, we are seeing a significant amount of employment getting generated for the industry. At the same time, I think the people are having significant amount of money to spend in the economy. So, all in all, put together, the industrial consumption is increasing, the personal consumption is increasing, and the economy is booming at this point of time. And it is likely to remain so in subsequent years as well. Given that situation, the earning growth of the market, where I think we should keep our focus on in this entire emotions, euphoria, whatever you want to call it as, the earning growth is expected to remain in the vicinity of 15 to 20% for majority of the companies in the coming period. If that is so, then probably the market will at least have a premium of 25 to 50% minimum on the top of the earning growth. And that's where people are likely to see the rally continuing in the market. Of course, I think 2024 elections, I think, are all about expectations, and ahead of expectations, the markets have always rallied. So this time around, it is not going to disappoint either. If it does get into 22,500, 23,000 kind of a zone before the election in May, then in such situation, I think investors will get good amount of opportunity to ride this entire boom, and at the same time, I think good amount of profits also, given the kind of the rally that is being expected before May. So with this balance of mind, with this balance of understanding on the subject, I think one can trade the market on a positive side.
Okay.
Right. Devin bhai, good morning. It's indeed a pleasure to host you, sir, on this very important day. And I am sure you must have fielded at least 50-60 calls all of Sunday, convincing investors where to put in money. Now, please also illuminate our viewers. Where do you think fresh money should be put in to sort of benefit from this fabulous rally that is in front of us? What sectors will outperform? And we'll be very grateful if you can name 1 or 2 stocks.
Yeah, Shail. Good morning and thank you for having me on the show. Obviously, I think this is an outcome which probably has given a lot of confidence to investors, and that calls have moved throughout the day yesterday and continuing today, largely because I think people want to see how exactly their portfolio can be further strengthened. Fortunately, I think having got the understanding on the economy and the corporate earnings side, we have been systematically investing and allocating money towards consumption. And that is where probably I think your question is being answered. They are spending and investing a lot of money into the consumption space, be it in the area of discretionary consumption space where you have the sectors like auto, ancillary, housing finance, along with, and a whole lot of ecosystem players in the construction material, building material industry, where probably I think our approach has been to systematically buy these stocks in the fall and stay invested. So that will continue. That is not going to change because we see if the economy is moving as I explained, at 7.5%, 8%, and in other side, I think corporate earnings are moving between 15 to 20%, then the markets are likely to give you a return of around 25% to 30%. So that is a kind of a possibility on which we have been selectively investing in strong companies. Our other approach is that the enablers, wherever the enablers are seen for this consumption growth, be it in the B2B space of consumption or be it in B2C space of consumption, the enablers are the finance companies, the corporate banks, the NBFCs, the housing finance companies. They are the enablers of this growth and they cannot lag behind. Fortunately, most of these finance companies are available at a valuation which is an attractive proposition. Given the kind of growth that they are suggesting in next 4 years' time, size of balance sheet for most of the finance companies are being suggested to double from current levels. Given that kind of a situation, the finance companies are in the portfolio as well. So on one side, the consumption space, B2B consumption space, we are also looking at the capital goods segment, the companies which are supplying to railways, the EMS players for defense and elements, particularly. I think we are continuously looking at, I think, those kind of companies and investing in them. Even I think the service sector and the hospitality business in which we like the companies of Praveg Limited, which is showing extraordinary signs of growth in coming 12 months to 24 months, given the kind of projects that they are implementing. We like this company. We like Geo Finance largely because of the fact that it holds underlying potential of NBFC, the insurance business, the AMC business, and also the financial product distribution business. We find that I think these businesses are likely to grow significantly, and that is where, from long-term perspective, we buy into this kind of companies in our portfolio. Within auto ancillary space, the likes of Tata Motors, likes of Hino Minda, they remain among the relatively safer bets comparatively because they're suggesting 40-50% upside in a coming period. So we like to, I think, stay invested with this kind of company. And any correction in the market could be a good opportunity. I must add a disclaimer here that these companies, we are having an investment in our portfolio, our clients' portfolio, PMS's portfolio, and they may be under our active positions. For many of the clients, I think, whose trades must be continuing on that aspect.
Okay. Devin bhai, what we'll do is we'll take a very short break. On the other side of the break, we'll discuss what kind of money should India be attracting from foreign institutional investors after this stunning electoral victory of the BJP in the 4 state elections. We'll be back shortly.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. We are in discussion with Devin bhai on how to benefit from the structural changes that have happened in the bull market after BJP's electoral sweep in the Hindi heartland states. Devin bhai, it's the foreign institutional investors that have marked their absence in Indian markets over the last 5-7 years. Do you think this stunning electoral victory that the BJP has notched up will once again attract them to Indian shores, and what kind of money should we expect them to bring in?
It's a very important point, Shail. I think the the foreign institution investors, as we call them, as I call them, as the foreign institution traders. Those traders, I think, who have been investing into the index funds, I think they took a shift, I think, a while back, and they took the flight and took the money out in the last 3, 4 months. Largely because of the fact that I think their leverage positions had come under the pressure and they had to unwind the leverage. So they returned back that leverage money. These index funds, I think, they operate with around 80-85% of that leverage money on their fund. And that money had to be returned to the lender. And that's where probably I think they returned from our markets. They did not go out from the markets permanently per se. This money has started coming into the country once again. And generally, the trend notice before January,
Right, sir.
I think they actually, I think, start putting money into the India market once again in the December before end December before they go for vacation, and subsequently they return back after February. So I think in this particular month we are likely to see the flow of money.
Right.
Hard to predict, but if we go by the report, I think it should be somewhere around $3.5 billion kind of money, which could come in a successive days. And my take is that I think this money would now come in the index
Right.
stocks where the index fund trade.
Absolutely. Devan bhai, we'll just pay attention to pre-open and आज लड्डू मेरी तरफ से हैं ऑफिस में. It's a 318 point gap up. Ladies and gentlemen, we have 20,588. In my mind, I don't remember seeing such a huge gap up, and congratulations to us all. We are in a new structural bull market, 1.5% higher. And if you had listened to our commentary yesterday, this is exactly what we had said. Okay, now Sakshi, it's a given that all 10 index stocks will be in the green, but nevertheless, let me start. Okay, HDFC Bank, 2.35% higher, ladies and gentlemen, 1592. Reliance Industries, 1.32% higher, 2426. L&T, hold your breath, 3% higher, 3285. State Bank of India, 2.8% higher, 588. ITC Tata Motors are up 1.75%. Bajaj Finance is up 1.25%. Now look at laggards. How the corporate banking sector is moving up. ICICI Bank is actually up 2.9%, 934. I want to see what Axis Bank is doing. 0.5% higher, 1110. And Infosys and TCS are flat. Remember, it's the day of the big boys. F&O stocks. Well, Adani Enterprises is up 9%, 2590. ACC Ambuja, Hero Motors, RBL Bank up between 3 and 4%. Ambuja Cement is up actually 7.5%. Sakshi, if you remember last week we had talked about Ambuja Cement now catching up with the rally that we've seen in the cement space, as also with Group Adani stocks. Okay, let's look at NSE 500. What is cash doing? The top 4 gainers are Adani stocks, Adani Green, Adani Energy Solutions, Adani Power. 20%, 17% and 15% respectively. Ambuja Cement, Adani Total Gas. So it's going to be an Adani day by any default. Raymond has come back up 2.4%, 1600. Hindustan Zinc 315, 5% higher. I think by now Ashish Chaturmota would have joined. Okay. We are doing an AV check with him. Devan bhai, what a fabulous opening. Your comments.
But I guess I think some of the heavyweights in the index have started participating, which is a good news. For a very long period of time, likes of Reliance and HDFC banks haven't participated. And in my understanding, I think they are the right case for participating into this Nifty rally, largely because of the fact that the fundamentals have always remained strong. They have been some of the strongest cash generating machines, if I may want to use this as a terminology. I believe that I think these companies, they deserve to be, I think, re-rated. And certainly, I think if they start getting re-rating, which I believe it's so, in such situation, I think the market will scale up the new index levels. And that's where you are going to see the catch up on the balancing side also. Because if the heavyweights like HDFC Bank and Reliance starts, I think, participating into the market, then other stocks, I think, by sheer weight adjustment allocations would also start moving up. And that is where we are likely to see the rally continuing to a new level to 20,500 plus to 20,800, 21,000 kind of levels. So that is where probably I think one remain confident about. Maybe I think one will have to be a little bit watchful also, not to get carried away. in some of the high valued stocks, and we'll have to wait and see how exactly they get corrected. But the big is getting bigger and the big is available cheaper. So my take would be that I think the bigger companies in making should be bought into the bigger names which we talked about in the portfolio.
Fair enough. Well, many thanks, Devin sir, for being with us and sharing
Thank
such
you.
valuable insights. Always a pleasure having you with us. Let's now introduce our other guest on the show. Ashish Chaturmeta now joins in. He's the Executive Director and Fund Manager at JM Financial Services. Ashish, very good morning and welcome on a day when the markets are treating you with a gap up of 337 points higher, 20,600 on the screen right now. I bet you must be already expecting this, but watch now. How does one really approach a 300-point gap up? 340 gap up now, 345.
Good morning, Sakshi. Good morning, Shail bhai. So, as we all say, market is a great discounting machine, and this is what got reflected in the last couple of trading sessions up move. And despite a great uncertainty of state elections were pending, markets started giving a very strong signal. And in the last 5 days itself, we saw a good rally where the index, started rising from 19,900 and almost hit a level of almost 20,300, 400 kind of trajectory. That itself was a very good indication that markets are in a very cheerful mood. And in such an uncertain environment, if markets are going to hit a fresh all-time high, if any positive surprise comes, that would be a rally of a start of a new rally. And as we say, if there is a significant gap up in any event driven situation, generally these gap ups become a very, very important milestone. And that's what I think now. 20,200 is going to be an extremely important support zone for market, and it will create a new base, at least in the short to medium term. Keeping this in mind, I think the way we look forward, it looks like we are heading towards 21,500 to 22,000 kind of trajectory in terms of Nifty after consolidating for good 6 to 9 months time frame, and it has seen a reasonable amount of correction in this journey. So I think this beginning of a new era starts from today onwards, and we think we are going to move towards creating a fresh all-time high. In terms of sectors, I think a lot of these public sector undertakings will see a very strong traction. So whether it is defense, power, or capex, railways, this broad theme which we have been discussing for a while, I think they will get a new trajectory for its up move. So I think yes, these sectors we need to focus in the immediate short to medium term time frame.
Okay. Right.
Ashish bhai, what a wonderful day to welcome you, sir. And Sakshi, I must share this with you. Just a week ago, I was in Bombay and I tried to fix up an evening meeting with Ashish bhai. We were supposed to meet for 2 hours. Ended up meeting only for 15 minutes because both of us were coming in a common place and both of us were got caught by traffic. But the traffic jam, ladies and gentlemen, is on Dalal Street. And that traffic jam is saying 334 अंक की तेजी 20,601 गजब. So these are days, which are etched in your memory. And just imagine, this is the state electoral win. Should the BJP get 350, 375, 400 on mid-May, what will the index do? And what will the index do between then and now? Anyway, Ashish bhai, since you are such a wonderful asset allocator, now tell us where to put in money. How should our viewers, how should investors play this gap up? What should they do? And where should they put in money?
So yes, Shail bhai, and I think the bet should be on India or Bharat, I would say, and that's what the bet should be. But yes, I think all the domestic focus themes should do extremely well. And as we say, just to give you an example, where has been the focus in the last couple of years? So focus was on infra, on railways, on capex, on manufacturing as a theme. Make in India is a big theme. And then, defense. So these are the pockets where the maximum capital allocation from government was happening. And as we say, we need a capex cycle. So almost we saw a very good amount of, union budget said that we are going to put in almost 10 lakh crore kind of capex in from the center. Almost 2,40,000 crore kind of capex was being announced in railways. And I think these sectors will see fresh traction of momentum. Now a lot of private players will start coming and putting in fresh capex in these kind of sectors. And so my sense is, and anything related to power, infra, defense, railways, capex and make in India should be the biggest beneficiary. Obviously, as we say, obviously, if there's going to be an overall momentum or inflow of money which will start coming from FIIs, it will benefit the larger sectors like banking, financials, even a lot of other themes or consumption related themes. But the biggest delta will created in something which I mentioned in terms of power, defense, manufacturing, and capex as a theme. So these are the broader sectors where I think the maximum money will be made. Just to give you a data point, in terms of power, our current capacity is close to 424 gigawatt. We want to take it to almost 775 gigawatt by 2030. But if you look at from that perspective, almost 500 gigawatt is going to get created in a renewable energy segment, which is right now 178 gigawatt, which means the renewable energy sector is going to see almost 17% kind of CAGR in next 7-year journey. And as we all know, with the rapid industrialization, with the rising demand, power demand, we have seen 240 gigawatt kind of peak electricity demand in the month of August, creating almost shortage of almost 11 gigawatt. So which means we need to produce a lot of power, and this is going to happen both from thermal as well as non renewable energy. And that's why my focus on stocks like NTPC, SJVN, Inox Wind, these are the stocks which looks good to us. As a disclosure, most of these stocks we are holding in our portfolio, so that's a disclosure. But we continue to believe in the entire power related theme as a promising bet. Second comes to my mind is the defense as a basket. So there, I think there are a lot of promising companies which are doing extremely well. One such company which we like within defense basket is Bharat Dynamics Limited. Again, a disclosure, we continue to hold this stock as our portfolio stock with a current top line of almost 2400 crore. We are witnessing 24,000 crore kind of order book for Bharat Dynamics, which means 10 times revenue, 10 times order book to bill is what BDL is indicating. And with a lot of indigenization, the operating margins are about 20%. So there is a strong revenue visibility for a company like Bharat Dynamics. And with this kind of mandate, I think defense would be one sector which will be in a great focus with a lot of indigenization. BDL, Bharat Dynamics would be my top pick. Technically, the stock has been consolidating for last 6 months. So I think now 1150 is going to be a very crucial support in the medium to long term. And looking into the long term charts, it looks like 1450, 1500 is what one can expect in Bharat Dynamics in days to come.
Fair enough. A lot of those pockets that have had a great run-up may continue to do a good show even going forward from here. But any particular picks from the large cap space, Ashish, that you would be positive on now, since they have not really participated up until now, but in this new bull run up until the general elections that you're expecting over the next 6 to 9 months, you said 22,000 on the Nifty. How would you really place your bets in the large cap space? Your top favorites there?
So I think financials will contribute a lot, and we have been seeing say underperforming the broader market, or there are other private players. But now with a lot of corporate capex coming into play, this will help a lot of these banks who were focusing on the corporate side of the loan. So my sense is ICICI has been underperforming. So this is one stock where in the large cap, I think some positive outperformance will start coming. If I had to take a bet, then I think PSU Bank VCTF is a very logical bet to ride on. So it has consolidated for good 4-5 months. So this is again giving us a great opportunity to initiate some kind of positioning on the long side. It has created a very strong base somewhere around 55. It looks like it is going to create a fresh all-time high and target somewhere close to 65 to 70 kind of trajectory. The reason being, most of these PSU banks are quoting at 0.6, 0.7 time price to book, and they have a very heavy focus on the corporate side of the business. So with this visibility in terms of the mandate, we expect capex to be in a strong momentum, and this will benefit a lot of these public sector banks. So that's why I think rather than betting on one or two single name, or the bet should be on the entire basket. And that's why I think PSU Bank ETF is one logical bet. Again, as I mentioned, public sector undertaking would also be in a focus. So to play that, CPSC ETF is available.
Sure.
Yeah.
Right. Ashish, let me quickly just mention this. On the Nifty, we have a 334-point gap up that the markets are settling at just before the opening. This means that the index has settled above the fourth intraday resistance of 20,601 very, very quickly. Okay, I think the markets have opened 20,557 right now, 292 points higher in trade. And we are seeing a lot of Adani stocks now move up in trade. Adani Ports as one of the top gainers coming in. We also have Hero Moto, Grasim, State Bank of India as one of the top gainers as far as the Nifty is concerned. Let's look at ICICI Bank. That's opening at 967 odd levels. So that's higher in trade. M&M Power Grid, we have the FNO space, Adani Enterprises as the top gainer, 9.5% higher in trade. Adani Ports now 6.5% higher in the FNO action again. Ambuja Cements, again another stock that we had marked up earlier, 3.2% higher for this one too. Tata Power is higher by 3%. ACC, that's another stock that's moving up almost 3.8% higher. The sectorally, it's the PSU Banking Index. That's the top moving sectoral index, 2.8% higher for this one. Metals is up in trade, 2.2% higher. Oil and gas also about 1.9% higher in trade. Small caps, mid caps, all of them. In fact, all the sectors are up in trade, all of them. All the 19 sectoral indices are up into the green. Off the Nifty again, I can actually see all the 50 stocks, I believe, up into the green. That's the kind of rally that you're seeing at. Shail, what are you looking at?
Sakshi, I'm looking at very almost everything and feeling very happy. I think this 280-point gap up is initially being sold to those fine gentlemen and ladies who purchased ITM calls or at the money calls are now laughing all the way to the bank by booking that. And you see the first move at about 20,554. Remember, the index opened at 20,601. So let's just look at it very systematically and go ahead with the index heavyweights. Okay, what is HDFC Bank doing? 1.76% higher. Remember, Nifty Bank is something that you need to look at. 45,623. I think this is a record high on this one. It's an 823-point gap up, 1.9% higher. So this is the index to watch, and as I mentioned earlier, that it's the frontline Nifty counters that will create magic. ICICI Bank 2.4%, HDFC Bank 1.8% higher, ICICI and Axis. ICICI Bank at 967 is 2.2% higher. Axis Bank is up 1.3%, 1120. I want to see stocks that have hit all-time highs immediately. My God, the list is phenomenal. In the NSE 500, Sakshi, the first four are government companies. NHPC 57 actually, 1.15% higher. SGVN 8720, 2.5% higher. GAIL 2% higher, 138.85. BEL, IRCON, NTPC, PFC, REC. These are all government companies that are hitting record highs. In terms of percentage rise, Adani Power 472.65. Let's not waste even a single moment and get Ashish Shatrumota into the conversation. Ashish, gap up 20,550 for you. What would you do at this level? I mean, go for a party, or are there some buying trades that you are executing?
I think we need to look at this from a medium-term perspective, and that's what I intended. That markets have consolidated for good 4-5 months, and after this breakout has come, obviously the initial breakouts always get sold off because a lot of intraday traders who must have bought their position in the last 2-3 trading sessions, they are getting good gains on their margins. So that's where this profit booking will come into play. But I think from a short to medium term investment perspective, I think now a new base has been created around 20,200, 300 kind of trajectory. Keeping this in mind, I think this looks like we need to initiate a position and use any kind of dip towards 20,400, 450 as an opportunity to add more, but we should not miss this opportunity. This is my sense, and my understanding is stocks like in the power, defense, they will continue to do well. So ideally, rather than waiting for a 2-3% kind of correction, it is better to get into stocks which have the potential to give you 20-30% kind of upside in the short to medium term, or can give a compounding return in the next 2-3 year time frame. So that's the reason I think stocks in the defense power or in the public in the banking basket, as you rightly mentioned, ICICI Bank is a stock which has been underperforming for last 9 months time frame. This has given a very decisive breakout again on the medium term charts. So these kind of opportunities should be looked as an style to get into the stock rather than waiting for some serious dips or cuts.
Right.
Okay. Sakshi, let's just detour in the market and look at how prices are moving. The first stock I'd like to mark is Bharat Dynamics Limited. This is something that has found fancy with both Ashish as well as a lot of other fundamental and technical players who grace our screen. BDL at the moment is 2.5% higher. 1.8% higher, 1246. Within the government space and of course the defense sector, BEL 151.85, 3% higher. BEML 1.3% higher, 2487. Cochin Shipyard 2.8% higher. I want to look at the super high beta space and look at stocks that are outperforming. BSE 1.5% higher, 2534. Punjab National Bank 3% higher, 83. CDSL flat 1913. And let's look at the PSU theme. Okay, it's Bank of India 2.5% higher, 110. Dredging Corporation 2% higher, 525. The market is actually undergoing a bout of profit booking now. Still 245 points higher, 20,514. The second 5-minute candle has started lower. Let's see where it takes support. Remember, the fourth resistance which Sakshi pointed out, on which the market had opened above, is at 20,483. Let's see whether the market slips till there and then bounces, but we need to party, and the party has a number 243 points higher, 20,510. Sakshi, what are you watching?
A lot of stocks. Let's look at the Adani stocks. In fact, all the Adani Group stocks are up by anywhere between 4 to 13 odd percent. Adani Enterprises right now the top gainer on the Nifty, 5.7% higher. Adani Ports follows 4.3% higher in trade. Ashish, I want to ask you, which of the Adani stocks are you looking positively on the charts? It's Adani Green Energy that's up by 7.6%. The top moving stock in the Nifty 500 basket again. Adani Total Gas also 6% higher. All of them are moving up, but which are the top stocks in your favored list as far as the Adani stocks go?
So, Sakshi, we don't have any exposure to any of these names, but yes, two stocks which we look positively and we keep track. They are Adani Ports and Adani Power. So, Adani Ports, because of the huge monopoly in terms of the port businesses and doing extremely well. And you must have observed in this entire saga when the stocks corrected, Adani Port is one stock which saw the lowest amount of correction, and now I think this stock has formed some serious base around 800 820 kind of zone. So keeping this in mind, there's a very strong possibility Adani Port would be one stock which is going to cross its previous all-time high, which was somewhere close to around 980,000 kind of trajectory, which implies there could be good 17 to 18% kind of upside from current levels. So if I have to take a bet within the entire Adani group, I think Adani Port would be my preferred choice of stock in the entire space.
Right. From the PSU banking basket, which is the top sectoral mover, Ashish, which is the top stock that you'd go with? Would you go ahead with the larger PSU banking names like SBI and PNB, or would you be more positive on the second rung PSU banks, which have actually had a fantastic run up in the recent past?
So I think, as I mentioned, I'll go with the ETF. The reason being, in this rally, I think both set of stocks will do extremely well because of large FI interest, which will come back to the market. It will chase a lot of larger cap names like SBI, Canara Bank, or Bank of Baroda. But since there's going to be a overall positive, move in the entire PSU banks, a lot of domestic money will start chasing the smaller cap names in the PSU banks, and that's the reason the ideal way would be to have a blend of both the names. If I have to take a bet in the large cap, I think SBI and Bank of Baroda, these are the two names which looks very promising. Within that also, I think Bank of Baroda has seen a very good decisive breakout, and that's where I think there is a good possibility stock might hit a all-time high of around 220, 225 in a immediate short to medium term. Whereas if I have to look at the smaller banks, then I think Union Bank is one stock which looks very promising. It is a monthly rounding bottom breakout which is happening in Union Bank. So I think there is a good possibility stock might see 15 to 20% kind of upside in next next 2-3 months time frame. So that's where I think Union Bank would be my preferred bet. On downside, stock has a very strong base around 808, 109. So that should be the logical stop loss for going long into Union Bank. So yes, Bank of Baroda, Union Bank, and PSU bank these ETF. These are the three trades which looks good or promising from the entire banking basket in the PSU space.
Two things I want to mark, which is the Nifty banking, the NSE Bank, 45,653 Sakshi, 840 points higher. It means that you are at the September 20th levels on this particular index. The all-time high that we are tracking on this one is 46,300. It's in the vicinity, maybe tomorrow, if not this week. Very, very sharp moves coming in. And I'd like to also make another point, Sakshi. There are 75 PSU stocks in front of me, and all 75 are in the green. That says two particular things. The government, the market is now betting on Prime Minister Modi, of course for 2024, but it is also betting that dramatic changes may happen within the PSU basket over the next 1 or 2 years, and the best way to trap that is to buy them early before the events occur. The second point I want to make is what Ashish Bhai mentioned. Play it via the ETFs. We have earlier done a show with Ashish Chaturmota on Market Masters, talking about how ETFs add value. And one of the earliest proponents of the PSU banking ETF, which was I think at 32, 33 rupee levels somewhere 2 years ago, was Ashish Chaturmota. He had caught it before the rally happened in the PSU banking space, and I'll check the price and let you know, but that would be the smartest thing to do. Ashish bhai, there is a CPSE ETF also, if I remember correctly.
Yes. Yes, so we mentioned, both these ETFs, first the PSU bank based ETF around 24, 25 and CPSE ETF around 28. Both of them have doubled or more than doubled in the last, 1-2 years time frame. CPSE ETF is around 60, and I think it has hit a fresh all-time high. But as we go, we believe that NTPC, Power Grid, ONGC, Coal India, Hindustan Aeronautics Limited, this will be the biggest beneficiary of this capex manufacturing defense as a theme, and that's why I think the logical way to participate this rally would be by taking a bet on the CPSE ETF, which is around 60 odd levels, and there is a good possibility we might see very reasonable returns coming from current levels also because of the recent development. So yes, CPSE ETF is at 60, and my sense is there is a strong base being created technically around 56, 57. So that also creates a very strong risk reward ratio in terms of medium to long term investors.
Okay, we'll try to show you the graph of the CPSE ETF in front of you. We are trying to process that, and of course the Nippon the Nifty PSU ETF, 1 second, I'll just PSU banking ETF is at the moment, let me just check it. Yes, okay, it's at 58.50. So both of these ETFs are doing fantastically well, and a personal note that Ashish caught the Nifty ETF on PSU banking Bs somewhere like 23, 24. This was really long time ago, maybe 2 years ago, but that rally continues and that money is doubled. 58.50 at the moment. I'll try and get this graph made for you for the CPSE ETF, which is the Government of India ETF, and of course the PSU banking ETF. Now, what is Nifty doing at this point of time? We've tested a low of 20,500, I think. Yes, and from then on the market is now moving up 20,567. Remember, the Nifty will turn into a buy only if it takes out the opening high, which is 20,601. So till that point, we'll just wait for it. But a very, very strong move coming in. Siemens is at 38.30. There was a parental move in terms of buying fresh equity. That is doing fairly well. Bharti Airtel 1043 doing fairly well. LIC of India 694. Ashish bhai, to you, how does the LIC of India look on charts? This was an underperformer, started moving last Friday. What are your views?
So, Shalbhai, we don't track it from a more, techno funder perspective, but yes, purely on a technical basis, this looks like a very strong base has been created around 600, 650 kind of trajectory. There's a very strong, volume interest which is coming into the stock, which gives us a sense now 660, 670 is going to be a new base for Life Insurance Corporation. And technically, this is a breakout above 700. If this breakout sustains, then upside towards 800 could not be ruled out. So I think there's a good 12 to 15% kind of upside possibility if 700 resistance zone gets crossover, which is a very strong likelihood.
Okay. Let me just quickly, for all our viewers, a lot of IPO action was seen last week. So let me just quickly pull up all those stocks that got listed and let's see how are they performing. Tata Technologies is down in trade again. We are actually seeing about a 4.5% kind of a dip right now. But Fed Bank Financial Services is up by 1%, 144. So you can see 1166 right now on Tata Tech. Let's look at IREDA. That IPO really got a lot of takers, and FedFina is up in trade, 1.1% higher. IREDA is up by 2% odd at 64 odd levels. Let's look at Gandhar Oil as well to see how that one is trading at, and then let's look at Flare Writing too. These are the other two ones that we need to just keep an eye out on as to how are they moving in trade right now. Gandhar Oil is 2% down in trade, and Flare Writing, let's look at that one as well. So Flare Writing in fact is 9.5%, 10% down in trade at 405 odd levels. Ashish, I know there are no charts for any of these that are available, but have you been tracking any of these IPOs? Have you been recommending to any of your investors, and what would you now, how would you approach these stocks now after listing?
Sakshi, we have been tracking, but I think because of lack of data in terms of the technical charts, we could not add more value. But definitely from a fundamental perspective, stocks like Tata Technologies makes a very interesting story, and that's why one of our favorite stock, Tata Elxsi, we continue to like the stock within the same space, and I think with a reasonable valuation, because the kind of growth this company is witnessing. So my sense is stocks like Tata Technologies, Tata Elxsi, they would be a proxy, beneficiary of this entire case theme or kind of ER&D space which is growing so well. So my sense is Tata Technologies on dips makes a lot of sense. Ideally, it's a stock which should be looked more from a SIP perspective, which should be added every month on a very regular basis, rather than taking a punt at one go. So that would be my style in terms of adding Tata Technologies. And as far as Tata Elxsi is concerned, we believe that technically, fundamentally, both this stock is showing very strong traction. So there is a good possibility stock might see a move towards 10,000 kind of trajectory in coming few months.
Okay, just for all the viewers, the Adani Group stocks market cap is now again at 12 lakh crore rupees for the first time since January 31st. So the momentum continues on that one. We will continue to keep an eye out on that, and we've also taken the views of Ashish on that one. The other space that I wanted your view, Ashish, is the energy space. You're looking at Coal India, NTPC, ONGC, even the oil and gas majors like HPCL and BPCL. How would you be approaching this entire basket, and which are the top stocks that you'd bet on now?
So preferred bet would be Sakshi from the power space, and different players in the value chain all are beneficiary, whether it's producer, distributors, whether it's into smart meters or something into renewable energy. This entire basket will do good. As I mentioned, the renewable energy itself is going to do a 17% kind of CAGR in terms of capacity addition in the next 7 years, because we need to do almost 500 gigawatt in terms of capacity creation in the renewable energy. So I think within this basket, as I mentioned, my top bet would be stocks like NTPC, SJVN, and Inox Wind. These are the three names which we like, both from a short to medium term perspective and both from fundamental come technical perspective. If I have to take a name, so Inox Wind has given a fresh breakout on the monthly chart. Now I think 285 is going to be a very crucial support for the stock. Keeping this in mind, I think 350, 360 is on cards from a technical perspective. NTPC has hit a fresh all-time high after consolidating for good 14 years. So my sense is this rally would continue in NTPC. On downside, 265 is a very strong support for NTPC, and this rally can extend towards 320, 330 in the immediate short to medium term time frame. And to take a ride on the entire public sector undertaking, the best bet would be a CPSC ETF, where you can have a proxy for Coal India, for NTPC or something like ONGC, HPCL, or to take a bet on the defense basket like stocks like Hindustan Aeronautics or BL. So that's the reason the ideal thing would be to go for a ETF in CPSC. But yes, individually names like NTPC, SJVN, Inox Wind, BDL, these are the names which we continue to like from an individual stock perspective.
Okay. Ashish, would you look at the Nifty Bank weekly call of 45,800, weekly expiry December 6? It's at 234.
I would avoid that comment, Sakshi, because we don't track options on a very close basis now, being, so more from a individual perspective, stock perspective. Yes, I think there's a very positive trend which is getting emerging, and this is after consolidation. So I think, yes, there is a strong possibility of short-term momentum indicators indicating some kind of fresh up moves which can get extended in stocks like ICICI Bank in the large cap, and in PSU banks like SBI, Canara Bank, or Bank of Baroda. So that could be our sense. But yes, from pure option perspective, I will avoid this comment.
Okay, it was our job to mark what is moving and moving rapidly. The Nifty Bank itself is now 950 points higher, 45,763, and it's only a matter of time. You'll see a 4-digit gain on the Nifty Bank. Remember, it's only 936, and this is the call that is showing all the action. 45,800 Nifty Bank December 6th call. The last time that we checked, it was trading at 215 rupees. Keep in mind, and let's see how the markets move from now on. But the Nifty has, over the last 15 minutes, each 5-minute candle is a green bar. Remember, the high for today is 20,600, and it is only beyond this that a technical buy will be triggered above 20,600. Let's see that happens or not. But two things, Sakshi, I'd like to make out as far as the overall trend of the market is concerned. It is rare to see all F&O stocks rise, and today is one of them. Just one loser on F&O, and all other 182 are in the green. When you look at the Nifty, you had mentioned in the first tick that all 50 are up. At the moment, 47 are up, 3 are down, and they are Britannia flat, 0.01% down. Dr. Reddy's flat, and it's Maruti, which is 0.5% lower. So it's a fabulous move that is coming in. But the smarter money is actually booking profit. You had mentioned Ireda. This is the recent listing that has happened, and that's at 63. Let me just tell you the right price. It's actually moving so fast that my eye is unable to catch it. 63.30 is what I saw last, and that's how it is at the moment. Engineers India 156. Let's take Ashish Bhai's view on Engineers India. Remember, he's mentioned that it's the PSUs that will rule the roost. 156 for you, Ashish Bhai. What do you say?
So very strong chart you have identified, Shail Bhai, and I think it's a beginning where the stock has come out of a good consolidation phase, and now I think with this fresh breakout, 152 is a very strong support zone. It looks like Engineers India is heading towards 175, 180 kind of trajectory, and with a very strong risk reward ratio, because it has been into consolidation phase for last many weeks and months. So yes, this is a fresh beginning, and 152 should be the trailing or kind of a stop loss for any long positions. But it looks like 15 to 18% kind of upside from current levels is what one can expect in next couple of months in Engineers India.
Okay.
Okay, it's the PSU basket that's running up away. Coal India 356.10, 2.7% higher. There is a fairly substantial move that is coming on. Just a moment. Let me just look at the PSU basket for a moment. And yes, Power Finance Corporation 4.7% higher. Bank of India 2.4% higher. Dredging Corp 1% higher. NTPC, one of Ashish's favorites, he can't stop talking about it, 3% higher, 276.80. RECL, IRFC, IRIDA is in the green, 1.2% higher. IRCON, NBCC. The list, Sakshi, is endless. Like I mentioned, 75 PSU stocks, all 75 of them in the green, celebrating the stunning electoral victory of the BJP in the Hindi heartland, 3 states. Ashish bhai, when you had joined us a couple of weeks ago, you had mentioned Shriram Finance. I think the stock was at 1850 at that point of time. Now 2087. I think it's a fresh record high. Your Techno Funda views on Shriram Finance?
So we continue to like the stock, Shail bhai, and this is one stock which is available at a very reasonable valuation and with strong, commercial vehicle growth. We expect this company to do very well. So my sense is at a reasonable valuation, significant discount to its peers, and a good technical setup which indicates us underperformance of almost last, I would say, 4 or 5 years has now started to cover up. So now this is a fresh breakout after consolidating for last 3-4 months. Keeping this in mind, I think now 2030-40 is going to be a very strong support zone. And if this continue to sustain, then I think this rally has a potential to move towards 20 to 50. That was a target last time we mentioned when the stock was quoting around 1850. As a standard disclosure, this stock we continue to hold in our portfolio strategies.
Would you trade REC and PFC now, Ashish, after the stunning move that we have seen? Both of them are up by almost 5% each.
So, Sakshi, when we look into these stocks, we see it from a shorter term perspective where the stock has moved from 240 rupees to almost 380, but we need to look into the size of opportunity these stocks are getting into. And as I mentioned, from 178 gigawatt, if we are going to, see a significant jump, then I think in the renewable energy to almost 500 gigawatt, that's where the size of opportunity lies. And I think the biggest beneficiary of these capacity creation would be companies like Power Finance Corporation, REC, and with I think the kind of losses on distribution will come down significantly. This will reduce NPA ratios for companies like PFC, REC, and a newly listed company like IRIDA. So I think from that perspective, it's these trends are very, very promising. Now, as far as entry exit perspective is concerned, yes, some dip towards 365, 370 would be a good area to add on the long side of PFC. But looking into the medium term perspective, it looks like the trend is very, very promising. And on upside, 440, 450 could not be ruled out in the immediate short to medium term in stock like Power Finance Corporation.
Okay. And, if you look at the cement basket that we had been just discussing, how would you be really looking at any pecking order that you'd talk to us about? Would it be the large cap Ultratech Cement, or would you go with Ambuja, ACC and the like? Would you go with the smaller players at this point in time? A lot of M&A activity is also taking place here. And now with the BJP victory coming in, of course, a lot of focus will again be on the entire infra pack, which will lead a fresh momentum in the cement space.
So I think, yes, as you rightly mentioned, there has to be a blend in the large cap. I think Ultratech is our preferred choice. With recent Kesoram acquisition, again, this company would be a big beneficiary because it has one of the largest kind of capacity in terms of cement. So Ultratech is our preferred choice. But if I had to take a bet in the mid cap cement basket, then I think Dalmia Bharat is one stock which looks quite promising. It has also added a lot of capacity and trying to reduce the cost of production with a lot of synergies in terms of cost efficiency. So that's where I think our preferred bet would be a stock like Dalmia Bharat, which is currently trading around 2290. It has been consolidating for last 6 months. So now I think there is some likelihood of a recovery which might start happening in stock like Dalmia. On downside, 2200, we have seen a very strong base getting formed in the stock. So technically, it looks like 2450, 2500 is on cards in Dalmia Bharat.
Fair enough. Good chatting with you, Ashish, as always. Thanks for being with us and discussing such wonderful stock ideas for all our viewers. Many thanks for being with us on the show, and we will continue to chat with you until that 22,000 mark really comes on the Nifty as well, and beyond that too. We'll take a very, very quick break right now, but when we return, we will discuss in our corporate trader section, Fino Payments Bank, and the top management of the firm will be with us. So stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today television. I'm Sakshi, and with me is also Shail Bhatnagar. And right now, we're now going to be focusing on the corporate radar section. The company on our radar today is Fino Payments Bank, and the company's top management is with us now. Ketan Merchant joins in. He's the CFO of the Payments Bank. Good morning, and thank you so much, Ketan, for taking the time out and being with us on this show. Of course, we will be discussing about your quarterly earnings that have just gone by, the outlook that you have, your plans for being a small finance bank as well. But we have to ask you, how have you looked at yesterday's BJP's victory in 3 of the 4, state assembly polls? What does that mean for you as a payments bank and, as a business in the industry that you're in?
Good morning, Sakshi and Sharad. Let me just start off with the general political or the in the ecosystem. In any country, when it has a relatively stable government, actually it helps in terms of infrastructure development. So the landslide victory or the direction in which the existing government got victory, it'll prove a good impetus for stability and the infrastructure growth coming for next couple of years. I'll stop the political point out here, and I'll just come to the how does it impact or something about Fino. So if I can summarize our quarterly results in Fino, these are largely in line with what we were expecting. We've been telling and making announcement that we want a 20% top line growth, and our business model is structured in such a manner that a 20% top line growth will have a 45% odd bottom line growth, and that's how we are. In terms of way forward, yes, our board has shown its intent to become a small finance bank, and with the kind of infrastructure, network, and digital space which we have made, we are all set to take this forward. And as we speak, we are expecting to put an application by the end of the calendar year for a small finance bank.
Okay, and how long will the process then take, sir, for you to finalize and for get it up and running?
See, typically it's a defined process by the regulator. It's having once we apply, it's a process of around 18 to 24 months, wherein we will be able to, if everything goes right with the regulator and regulator is giving the license, it takes typically 18 to 24 months, is our understanding.
Okay. And operationally, what kind of opportunities are you looking at by becoming a small finance bank? How will it really open more business lines for you? And what are the incremental, top line and bottom line, projections that you would have once you turn into a small finance bank?
Yeah, that's a fair point. I think we just have to step back and understand our business model. As we speak, we are not a brick and mortar business. We actually started off from a technology company and operate with minimum number of branches in our payment space. We have around 16 lakhs merchant point, 1.6 million, and around 90 lakhs, 9 million customers. Besides that, the infrastructure which we've essentially made, our thought process is lending, through small finance bank would be an incremental product line which we'll have. We are not going to become a brick and mortar lending institution. The way we look at it is it will be a payment bank plus plus model. Just to give some statistics, last year, as Fino Payments Bank, we had more than 1,100 crores of fee-based income. And that is what we intend to continue. Internally, we call the model as a payment bank plus plus model, wherein a lending will be an additional suite which will come for the customer in terms of the target segment which we are looking at. As regards to your point in terms of growth, yes, lending business does give incremental bottom line as well. So we are looking at a 20% kind of a growth in top line over a number of years, and that is a CAGR, and that will lead to because of our lean model, a 45% or so increase in on an annual basis, increase in the bottom line.
Right. Mr. Merchant, welcome to Market Today. Shail Bhatnagar this side. I'm just asking a fundamental question. You started out as a fintech company. Then you went into a full-fledged bank. Now you are turning into a small finance bank at a time when, the whole banking space is abuzz with credit growth, fabulous demand. Here is a bank which came out with an IPO of 550, 560 rupees and languishing at about 280 rupees. The market doesn't seem to have appreciated your strategy from a fintech company to a bank and then now a small finance bank. I think the board needs to make up its mind what it wants to do.
Sharad, let us just give a perspective of our journey, and maybe in that journey we will also attempt to answer, or rather I'll attempt to answer the point which you have raised. You are right. We started off as a technology fintech company. During the tenure, we got an opportunity of becoming a regulated entity in terms of payment, and now we are evolving ourselves into or attempting to go for a small finance bank. We are not. It's a natural transition which we are doing. We are not changing our strategy. Our strategy since the beginning has been TAM, which is transaction, which was the first phase when we were fintech. Acquisition. A stands for acquisition, which is the current phase which we are doing as payment bank. We open a new bank account every 10 seconds. Approximately 2.5 lakhs account on a monthly basis we open, and then we have the last part of our strategy, which is monetization. Now, monetization, whilst we can do it as a payment bank as well, however, our SFB license helps the kind of richness of data which we have, and that is the reason as a part of our TAM strategy. And if you recollect in some of our IPO discussion, I had made a similar thought process as well, that we will follow the TAM strategy and at an appropriate time, if required, look for evolution of license.
Right. Mr. Merchant, given the fact that Indian citizens prefer a physical bank branch and the safety of a PSU network to put in their hard-earned savings in what is known as the CASA ratio, yours lacks that. And, an internet-based entity which was once a technology company, now wanting to get into a bank, somehow doesn't convey the kind of gravitas that is required to make banking successful in India. Are you going through the physical branch route as well?
So, Sharad, I'll try and give some statistics out here. Yes, we are a technology-based company. We do 27% of our 1.6 lakhs crore, throughput, which was half year through digital. However, I earlier started off telling Sakshi as well that, we have around 16 lakhs, 1.6 million merchant touch points. Over since 2007 to 2023, Fino has been associated with rural India, or with, below tier 3 and so on. So that's where the trust factor, that's where the physical touch point is essentially there. There are two ways to do this. One is to do the traditional brick and mortar branch type, which may or may not be as economical. However, we've penetrated more. Which other partner or which other player in our industry may have such a kind of merchant network? And your merchant network is not the QR code merchant. Your merchant network is essentially where you can get banking services. So you hit the nail. Our approach is phygital. The physical part of 1.6 million and growing, and the digital part which we are doing it of. So that's the combination which we are looking at in terms of our target segment.
Right. Ketan, could you also help us really understand in terms of your user base, where does it stand at? What is the outlook currently? In terms of your deposit base, where is it at? And where do you see it going forward from here?
Oh, that's a good question. As I said, our user base is around 9 million or 90 lakh customers, growing at around 2.5 lakh new customers per month. Which makes it one new account getting open every 10 seconds, and that's how it is. What are we looking at in terms of over next couple of years and more? We are looking at a customer base of 2.5 crores, which, as we continue to, our acquisition phase, which I essentially said. How will we progress about it is mentioned in my acquisition strategy, which I said that we are focused on our target segment. Currently, 70% or plus business of us comes from tier 3 city and lower, and that's how we will continue to grow our acquisition phases.
Fair enough.
In terms of deposit, I think deposit we have a humongous base. We have around 1,300 crores of total deposit coming, and at a cost of funds of 2.1%. Which is itself in a unique scenario, and we'll attempt to grow that as well.
Fair enough. Well, thank you so much, Ketan, for being with us on the show and discussing all these valuable insights. Getting back to the markets, 286 points higher on the Nifty, 20,554. So celebrations are on as far as the stock markets go. When we talk about the Nifty 50 stocks, just about handful stocks are down in the red. Britannia, Maruti, HDFC Life, SBI Life and HCL Technologies. It's Adani stocks that are ruling the roost. Adani Enterprises as the top gainer, 6.5% higher. Adani Ports also almost 6.5% higher in trade. Coal India, State Bank of India, L&T, ICICI Bank, BPCL, NTPC as the top movers on the Nifty index right now. From the Nifty 500 basket, Adani Green, BLS International, Adani Power, Adani Energy, HPCL and BPCL are the top movers. F&O space, again, it's the Adani stocks, Adani Enterprises. Then you also have HPCL, Bharat Electronics. You also have GAIL India and PFC as the top movers right now. We'll continue to watch out for how the markets move forward from here. So stay tuned onto Business Today TV. Until then, many thanks for tuning in. For now.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with